Hello, welcome back to my channel. So today I'm gonna be talking about Fibonacci. So if you haven't already checked out my first video of the Fibonacci, which is for the beginners, please go check it before you watch this one. So in this video, I'm gonna be talking about why I use several tips to find support and resist. So, number two, where I enjoy trading. This is very personal, right? So it can be wrong. Number three, but this I have very good win rate. I don't know if I should call it win rate, but yes. And number three, the last one, how to differentiate between ABCs and impulses. Alright, so these are the three things that I'm gonna be talking about in this video. Okay, so if you so before I start, let me just explain why I use several different fib zones. So if you go to my Discord, you will realize that, so here we go. If you go to my opinion channel, you see that I use several different fib. Try to find the support and resist zone, always. Sometimes I use 3, sometimes use even more. Okay, so if I try to explain this simply, so this is the whole population of people trading Bitcoin. This can be applied to stock or anything that has chart to it. Okay, so let's say the red box is a people who are trading in day time frame. Okay, so this is a 4 hour, and let's say this one is 1 hour and 30 minutes. The last one, let's say 1 minute, whatever. Okay, so normally people trading in small time frame are day traders like myself, right? But people who look at 1 minute time frame, right, they also check 5 or 10, let's say 30, 1 hour to 4 hour and daytime frame, right? So they will also check all these, right? People who are day traders. However, if you are say if you trade maybe once or twice a day, you might not look at 1 minute because it's very volatile and it's very hard to predict and analyze in 1 minute time frame, right? So you might look at only 5 to daytime frame, and next person might only look at 30 minutes and plus, and so on and so on. Okay, so if you are if you think about this, very simple math, right? So the stronger the time frame, the bigger and the stronger the chart analysis it will become. So it can apply to Fibonacci, it can apply to MA, moving average, RSI, volume. It can be also trend zone, whatever. Okay, so if I give you a quick example, so let's say this is 4 hour, right? This 4 hour trend zone, okay, say this one will be stronger than 1 minute time frame trend zone, right? Will be stronger than this one because more people take a look at this time and they will go into position at this price. So people who are trading daily, weekly, and even monthly, or even long-term trade, long-term investment, they will go in a long position here, right, or here. However, people trading in 1 minute time frame, or I mean people who are trading daytime frame, will not look at 1 minute time frame, and this will not be considered an important trend zone, okay, trend line. So that is why I check big time frame. Okay, okay, so okay, I hope you understand. Okay, so the reason, okay, so I'll get into the reason why I used a couple of different fib zones and why they are important. Okay, so first of all, let's draw an impulse. This is an impulse, right? And you have ABC going down. Okay, so there are different scenarios when you use different flip zones, but say you have ABC going down. So normally what people would do is they draw Fibonacci, right, for the uptrend and see the retracement for the flip zone. So whether this correction is going to be supported at 618 or 38% and so on and so on, right? So this is one example of Fibonacci that people will draw. The next one will be when A wave is finished and C wave is starting after B wave, people will also draw Fibonacci extension for A, B, and C. In this case, wherever it collides, wherever it overlaps. Okay? So say normally when there is A wave and B wave, C wave will be an impulse, right? In this case, a lot of the times, C wave will stop at 2 and 213, right? Or 1.68. So in this case, the fifth retracement for the uptrend, very strong place is 618, and also for Fibonacci extension for the correction wave is also here. So these two are in similar place, meaning this will be a very strong supporting zone. Some people will go long position here, some people will go long position in this place. So this will become a strong supporting zone. Same thing here, 2 and 786. Okay. Not only this, you can even draw different time zones. So let's say you go to 30 minutes, okay, and you draw Fibonacci retracement for the downtrend, and let's say you draw another Fibonacci for uptrend. Okay, so now wherever it collides, wherever it overlaps, okay, is a very strong. So right here. So let's see if this was indeed a strong supporting and resisting zone. So you are able to see that when it was about to go back up, it was resisted. Okay. Same thing here. And wherever it overlapped, same thing here. Okay. From these, you are able to see. So let's say this was ABC. Now let's draw another one. There you go. So let's see, we're 3, 2. So this is a place where 3 prices overlapped, or right here, and right here, 3. So that is why it was supported in this price. Okay, it's very simple. I don't think there was another one that has 3 price in it. Oh, there was one here, and one here, and one here. It was a little gap between 0.5 and other 2. However, it was another strong supporting zone, as you can see. Okay, so this is the reason why I use Fibonacci zone, several different Fibonacci zone at the same time, and this also applies to other indicators as well. Okay, so that was it. And where I enjoy trading. Okay, so there is 2 different types. So let me just draw this. Okay, so normally I enjoy trading in C wave and the third impulse. Okay, so you might say, oh, only C wave, then there isn't much trading opportunities, right? So if you miss the C wave, you have to wait for the next C wave? No. Okay, so in the ABC corrections, within ABC corrections, you will see if it's 335 flat, you will see ABC, and 1, 2, 3, 4, 5, right? 1, 2, 3, 4, and 5. So I will trade here, and also here, because this is considered C. C and C. Also, this is third impulse, right? So there are many C waves in elite wave theory, and also a lot of third impulse in when it's impulse going up or down. Okay, so how I would trade if I was expecting a C wave. So after you see an impulse, you see ABC going down, right? always after an impulse, you have to have a correction. So you see that, oh, there was A, B, C. Because you're a beginner, you don't trade in a smaller time frame because you're not 100% sure. And you see that there was another ABC and it did not go above the fifth impulse price. It might go up if it's a regular pattern. However, normally it doesn't, okay? And you can also check if the B wave was ABC or impulse. If it did go up, creating an irregular correction, you have to check the smaller time frame whether the B correction was ABC or impulse. If it was impulse, then that was probably the fifth correction and going down. If it was a ABC going up, then it was probably a irregular flat. Okay, it's called also running flat. So normally I would start taking short in this position where the trend line has been broken. If you check my Discord, you will see a lot of the times that I show you the trend line, right? When the trend line finishes and broken with the volume spike, normally that is the change of different trend for going from B to C. So what I would do normally is take Fibonacci from 1 to 5 and also take another Fibonacci from A, right? So bottom of A to top of A. And I would see where they overlap. So for example, right here. Okay, and then I would take long position here. Also other places if they overlap. So this is also another very strong place, right? And I gave you a lot of examples if you check my opinion channel. So you will see, and you can go back to the time and you can also check on your own. For example, let me just go to, let's say 15 minutes. Let me just find an example, good example for you. So this is another example. So if the chart is creating this type of pattern, right, going up, this is ABC. So if I go to even 4 hours, you can find this many places right here, right? Also, this is another similar one, but not so this was closer to the flat, this wasn't, but both of them were 335, right? So what I would do in this case, I would take Fibonacci, bottom of A to top of A, right? And I would take a long position right here. And my first TP will be 618 right here. The next one will be right here, 2 and 213. Of course, the trend can go and longer, creating a higher price. Since this was A, B, and C, right? But normally it would get resisted in this price. Let's go check this one then now. So ABC, so A, B, and C. So same thing here. I would take my first profit right here, and the second one will be here, but it didn't come. So I would have to wait until here or switch to short position after it was confirmed that the trend has been broken, right? So you would take your position out at this price. All right, so that's it. If I go to smaller time frame and show you, let's see. So for example, let's see if I can find a flat. So this was another example, right? So if I take Fibonacci from top of the A to the bottom of A, so the first one will be here, 618, right here. And the next one will be right here, 213. In the end, it broke the trend zone and started going down, right? Same thing over here. It broke the trend and then started going down. So it's very important if you're a beginner or even if you're a pro trader, you have to draw the trend line. These are very critical, okay? Next to Fibonacci zone and elite wave theory and so on. Okay, so the last one that I'll be telling you about is the difference between correction and an impulse. So it's very difficult sometimes because if the correction is a zigzag, then the pattern is same, right? So this is, if this was a zigzag, this was 5, 3, and 5. Same thing, impulse, 5, 3, and 5. So how can you tell the difference between a zigzag and an impulse? It's quite simple actually. Because an impulse, the third wave has to be above. Okay? The minimum price is 1.618. It has to go above. Normally it goes to it gets resisted around 2.618 normally. Okay? But it might go higher, of course. However, if it was not an impulse but a ABC zigzag, then it would be A, B, C. C would finish before 1.138. Okay, so this is the two different things that you will see right away. So if you see there was an impulse, two impulse, right? But it was correction, and then the correction price went below A, then you can right away see that that was an ABC correction. However, if you see an impulse correction and an impulse going up, but extended one that goes over, well over 1.618, and then correction does not reach the top price of the one, then you can realize, oh, okay, so that was an impulse, and it will likely go up again. Okay. Another thing that you might be confused then. Okay, so what about 335 then? Okay, so 335 might go up to 2 and 2.3. So how do you tell the difference then? Of course, then you have to actually do counting here, right? You have to actually do counting and try to figure out whether this was an impulse leading or just an ABC, because that will be a big difference, right? And after that you will see a correction and then it will go down instead of breaking the new top price and then creating fifth impulse. Also from volume, you can volume and RSI and so on, you will see indicators indicating that this was a third wave. So normally volume spike will be at the third impulse, and the fifth impulse will be lower, creating a divergence. And after correction, there will be another pump, right? Even though the price was broken, new high was created, the volume will be lower. Another divergence will be created going down. Okay, so from here you are able to see that, okay, that was a clear impulse. Normally I give good examples. Let me see if I can find an example for you guys. So let's go to 30 minutes. Okay, so this was a recent one, right? Right now happening currently. So if you check this one out, let's say this was an impulse. 1, 2, 3, 4, and 5. Let's say this was an impulse. You see the third impulse, right? There's another impulse within the third impulse. 1, 2, 3, 4, and 5. So you are able to see that the third impulse had a big volume spike. Fifth one had a lower volume spike with even the price was higher. And the next one, the fifth impulse, also had a lower volume spike, creating a divergence. You don't even have to check the divergence. There was a divergence right away. I can see it, right? Divergence, easy. So let's see if I can find one for a going down right here. So let's say that was an impulse. 1, 2, 3, 4, and 5. So third impulse, the volume spike, right? Third impulse, the next one, lower volume spike, creating a divergence. So you had a fourth correction. Again, you had lower low, but the price went low. I mean, the volume went lower, meaning there was another divergence created, and this was the end of the wave. I don't have to check the divergence, but I'll do it for you guys. Right here, right? There was divergence, clear divergence. So this is how you realize, oh, okay, so we're at the end of the wave, and there might be a trend change after these indicators. So normally what I recommend for you guys, if you're first time trading, I would wait. If there's a huge volume spike in, let's say, 15 to 30 minutes, I would wait for the next one. And then when the next one is lower volume, then this is possibly a trend change, and you have to draw the trend line. and see when it breaks. Okay, once it breaks, that is confirming you that we are in a different trend zone. Okay, which was right here. Let's say right here. Okay. Okay, so hopefully this helps you trade in the future, and of course use Fibonacci and so on and so on. If I tell you quickly how I traded in here, I was not able to catch the top of the bottom price because I thought this was a simple correction and then going down again, right? So what I did was, let's go back here. So that was ABC, ABC, and then AB impulse, right? So I thought that was 3.5. So what I did was I took Fibonacci from bottom of A to top of A, like what I showed you before, and of course I took another Fibonacci from top to bottom right here, and I waited until this price right here, 2N, where it collide. You see this? So I put my limit sell here, short here, short position, and I went to sleep. Next morning I wake up and then I was making money. All right, same thing goes here. So this was ABC, a bigger time frame, bigger one, right after the small ABC. So same thing here, take Fibonacci from top to bottom, and I personally thought that it was gonna finish here, right? Let's see, there was no overlap price, so it was not a good price. So what I did was I waited until reverse. I waited until this price too. I did actually go in short position here, but I didn't want it to break. My stop loss would be here because if it break, that means my my TA is wrong, right? My analysis is that this was an impulse, this was correction, and it was gonna go down, and the maximum that it can retrace is the 100%, 99%, which was this price. So actually I did go in, but then it broke, right? So then I would have to realize, oh, okay, so this is no more a ABC but on the impulse, and it could have another higher high. Okay, so this is where I actually traded and then I profited. This one I went in short. Then as soon as I saw it go break the previous high price, I realized, oh, okay, this is an impulse. So I waited for the next one and then I went in another short, and so my average price was around here. So I holded this short position for about 2-3 days. I can't remember exactly how long, but then I ended up taking profit here and here. Yes. And then after that, there was A, B, and C. I saw this one break the trend zone, so I took another short position right here, which I told you guys. And then I did take another profit here and at the bottom. And right now, I see that it is creating another trend zone, right? This is why the trend zone is very important. And you see that it was broken just now. So this is another good place to go in short. And where would you put your stop limit, right? I would go in at the second retest. Normally I would wait for the retest, and then I would put my stop limit right above it, right? So at this time, let's see if I can go to smaller time frame. Okay, so here it went over, right? So normally one, I would wait for another one. Right now I'm not in short position, but I would wait for one more. If it goes back up again, because this is not a clear retest, right? So I would wait for the second retest, and then once it goes down, I will take short position, and then I will place my stop loss right above it. It might just go down right now. If this was a leading and this was a correction, it might go down an impulse. All right. So unless I'm 100% sure, I don't go in position. I would just rather wait at the bottom to take long position. Which I actually shared in my Discord, so you can go check that out as well. Okay, so that's it for today's video. It was quite long. I hope this helped you a little bit. If you have any questions, please let me know in the comment section below. Yes, I'll see you next time. Bye bye.